Hey there. Confused about the market? Well, you're not alone. There's a ton of opinion out there, and much of it seems to conflict. I'm not sure that I have any answers for you, but I am in the market every day. I see a lot of properties. I look at a lot of research, data, and trends. I speak to a lot of clients and colleagues. So I have some thoughts, observations, and opinions that you might find helpful. If you do, that's great. If not, that's fine too. It's been a crazy year. The market was off the charts in the first half, with bidding wars and prices going well over asking on just about everything. Things slowed down quite a bit during the summer. They picked up again in September and October as new supply entered the market and buyers came back after the summer season. As we enter the holidays now, with less new inventory, things appear to be settling down. We'll see what happens as we roll into the end of the year and into early next year. Inflation has been the big issue most of the year. Prices have increased, markets have suffered. Recent data implies it may be moderating. That's a good sign. We'll see what happens. Some have predicted a recession in the next couple of years. Unemployment is currently low. And can a Fed policy help moderate and avoid it? Another thing we'll have to wait and see on. If we do end up in a recession, I guess a big question is, what does it mean for housing? Underlying economic conditions are different now than they were during the recession of 2007 to 2010. Back then, there was a lot of mortgage debt, high-risk borrowers, questionable banking practices, correlation risk in financial markets. That's much less the case now. Lower levels of mortgage debt and less housing supply exist today. There's also an interesting demographic in the sense that millennials are now 12 to 15 years older than they were back then. They represent the largest sector of the population, and they're at peak home buying age. So can millennial fuel demand, help support real estate prices if there is a downturn? Maybe. And perhaps if so, that means we end up in a slower price growth environment rather than a decline. And maybe it impacts some markets, but not all. We'll see. The stories change every day. And I guess the thing to ask ourselves is, what do we do in the meantime, and where do we live? As mentioned, the big issue to date is or has been inflation. Rising prices have increased our cost of living. The Fed has aggressively raised rates in a short period of time, hoping to rein it in. There are some signs that it's working, but it's likely too early to tell. Mortgage rates have come down a bit in the last few weeks, which is welcome relief to many buyers. That being said, rates are still pretty high relative to where they've been in recent history, and that's decreased purchasing power for many buyers. As a result, demand has slowed. With less demand, mortgage applications are down, and housing starts have declined. I guess with decreased purchasing power, some can no longer afford the home they want. Others can, but have to compromise. Some sellers face less demand and have had to reprice. Upsizers and downsizers face challenges rolling into higher rates from their existing low-rate mortgages, and then having to manage a buy and a sell transaction in a tricky market. Some buyers have decided to wait and see. Others see opportunity and are buying now. Cash buyers have flexibility. Income and wealth-constrained buyers have less options. So the big picture is uncertain and hard to read. But from what I see on the ground in New York City, local real estate seems to be doing okay. In Brooklyn, homes keep coming to market and people keep buying them. Same for Manhattan, although things feel less strong there. The market has slowed since the spring. Some of it's seasonal, some of it feels a little bit more. As you can see from the chart, supply is down in Brooklyn seasonally and from prior years. It's also down in Manhattan, but the downturn appears to be more consistent with a seasonal cycle. Demand is also down in both Brooklyn and Manhattan from last year, but given less supply, prices have had support and have been relatively stable. So as things stand now from a negotiating leverage standpoint, between buyers and sellers in the market, Brooklyn appears to be in a neutral market, and Manhattan appears to be in a modest buyer's market, both with currently a flat trend. That being said, it's hard to generalize because supply and demand can be very neighborhood specific. Demand can be very property specific. So it's really hard to extrapolate what's going on in the broader market to a particular property that you may be looking at. Despite the broader economic challenges, the real estate market seems to function. Buyers need to buy, sellers need to sell. Opportunities exist and new ones are created every day. As mentioned, leverage has shifted in certain cases to buyers. With less competition, buyers may finally have an opportunity to pick up a home without having to be in a bidding war and paying well over asking price. Also, since we're in a seasonal and perhaps broader slowdown with less trafficked properties, certain sellers that are motivated may be more inclined to take price reductions. So that may result in discounts to buyers on select properties that are slow to move. Additionally, some developers with increased borrowing, material and labor costs may have to cut prices in order to clear inventory, which creates opportunity in new development. Rental demand is high, rents have risen, there's a perennial housing shortage. That creates opportunities in single and multifamily rental properties. Additionally, sellers with homes that check a lot of boxes for buyers that have well-priced and positioned those homes in the market may see less competing inventory and a still active buyer base. So that's really an opportunity for sellers that are listing properties in the current market. So despite the challenges, I still see opportunity. It's only my opinion, so take it for what it's worth. I'm sure you have your own. So please feel free to share it. I'm always happy to share views on the market, learn about your needs and goals, and help where I can. So that's all for now, and I'll catch you next time.